Hey folks, quick update on the markets. Ignore the microphone. It's my quest to get better audio quality. So I'm trying it up here for now. It's a bit weird in my face. I did a live stream yesterday. It took about an hour and a bit. So I covered a lot of this stuff in quite some detail. I just want to update today very quickly and go through a few of the things. So you might know that we're long on the euro and the pound and short the dollar yen. The dollar yen has just bounced back up to its underside of this trend line. It's a very short-term trend line, but it's actually the joining point of this longer-term trend line coming up from underneath and the short-term trend line coming down from the top. We're now short again. Just add another small tranche there, looking for this to move down. Much, much lower. And I think we could see this gradually, maybe not as dramatic as the unwinding of the carry trade, but gradually moving down. And as the dollar index moves down, in sympathy with the euro, the pound, and all the other majors, the euro being the most important one. These are just pulling back a little bit today as the dollar index gets a little bit of a bounce around about the 50-day moving average, but we're now just back into what was support. It's now resistance. Let's have a quick look at that. So that's a very, very clear support and resistance level. It was a swing high, then it was a support ledge, really. We've had a flat bottom breakdown. We're retesting the underside of that flat bottom. So I think it still looks okay. We'll see how this works out. Now, on stocks, I covered this in a lot of detail yesterday after giving the reasons for why this all happened. And of course, there's all the AI news with DeepSeek, making sure I got the name right, being able to produce an AI ostensibly with very, very little resources, very little chip consumption, and very little money, and challenging the US. We've also had the Japanese carry trade partially unwinding to an extent as risk assets got unwound. Some money flew back into the yen. And then, of course, we had the trade war news from Canada and Colombia. I think the Colombia story is sorted out. Canada probably too, as well. If we had seen oil prices and natural gas prices skyrocketing in sympathy with what was going on with Trudeau and his threats against the US and vice versa, then maybe there was something going on, but the prices are still coming down on oil and gas. So that's it on stocks. Where we are today, I don't know. We don't have these 2, 3, 4, 5% sell-offs without a bit of a continuation, particularly in pre-market like we had on Monday. We sold off about 2.5% before the market opened, and every time that's happened in the past, we've carried down to about a 10% correction. So just quickly looking at the NASDAQ, I'm not going to go into all of them. I've got my blob still in place here. We're right in the middle on the red line, which was the support and resistance line, the breakout line. It's also the channel center line. And we're at the top of this breakout channel, having just closed with inside of it. So I'd say it's 50-50. This could go up or it could go down. We're short on the NASDAQ and short on nothing else. We got out of the German 30. We were short on that, as you know, and we're now out of that one after having bounced off the top of the Bollinger Band, not even the 20-day moving average or the channel top. This may well come back down to my blob quite quickly. We'll have to wait and see. But for now, we've got a short on the NASDAQ. We've also got longs on Tesla, Apple, and Coinbase, and that's it on stocks. Bitcoin and gold and other metals, Ethereum as well, and XRP. We're long on all three. Long on Ethereum. You can see my entry points, my last entry point on Ethereum over there. This is just a summary, folks. I'm not going to go into a lot of detail. There's my entry point on Bitcoin, down around 91,000. We're at 102 now. And XRP, Ripple, just making a beautiful spike low yesterday. All of these cryptos spiking down, spooking people out again. You see this all the time. Let's have a look at Bitcoin, for example, but you can see the same thing on XRP. But these spikes, there's one there, there's one there, there's one there. And we get this all the time. There's another one there, another couple there. And these are designed to take out the weak hands. Not really designed in as much as the universe is designed. You might think that, or you might not think that. Or you might think that these markets and the movements of these markets are designed by algorithms and big players to trap smaller retail traders. Perhaps, I don't think I subscribe to that conspiracy theory as much as other people do, but there is some of that going on. So we're long on all three of those. We're also now out of gold and silver. I took profit on our long positions on gold and silver as we pulled back yesterday with that big sell-off. And in order to mitigate risk, I took some positions off gold and silver, but we're holding platinum and palladium still looking like this sort of pattern trying to form this sort of cup and handle on palladium. Platinum looks similar. Let's just switch this across to platinum. Not quite a cup and handle formation, but a similar sort of pattern, almost a cup and handle, I suppose, but dipping down a little bit more. So just holding up there at the green line. We're long on both platinum and palladium. We're now out of gold and silver. I'll be looking to rebuy these on dips. We may have prematurely evacuated our gold and silver positions, but so be it. If we show some bigger strength and break out through the highs maybe above these levels, I might have another chance to go long on both of those. So that's where we are on those. I was looking at carbon credits earlier, just ignore that. And then we got uranium, big pull-offs on uranium. I think really just panic again. The idea was that maybe, just maybe we don't need as much electricity if there are AIs out there using much fewer chips and less demand for electricity and therefore natural gas and uranium. Natural gas and uranium and oil actually all sold off for different reasons, I think, though. Uranium got spooked. This is always going to be a spooky type of thing. It's an emotional type of instrument to trade, and there are ups and downs in people's thoughts about nuclear energy and so on. Natural gas, well, we've taken a long position, but we're now about to be reversed on this. Not reversed, but hedged. Once again, I covered this in the live stream yesterday, so I'll link that to the end of this video. But we got long here at the support level. We've now broken down and actually now dropped below that spike low. I am going to buy some more down at this level here, at this previous swing low, at about 3.6. This is on the continuous price at Pepperstone. It's got nothing to do with the futures price. This price doesn't roll over. There's no contract. It's a continuous price, so it's trading a little bit differently. I'm not in the futures price until Wednesday or Thursday in that market because of the rollover coming up on Wednesday. That's tomorrow, and I won't be trading the futures until after that rollover. However, I've taken a long position here on the continuous at Pepperstone, and I'll take another one down at the swing low, down at about 3.8, as you can see where my arrows are. And I've got an orange arrow there too, indicating that if we do break and close beneath that level, then I will immediately hedge the entire amount and wait to see what happens next. Maybe a ride down to 3.5, maybe all the way down to $3. Let me show you on the day chart what that looks like. This is the Henry Hub price at my broker, which is now rolled over into the March contract. So let's have a look at this. And I've actually done a little projection as to where I think we could go on this. If we don't hold where we are, we may need to get into this green block where the 100-period moving average is. And that's just around about $3, $3.05. $3 is a very, very key and crucial number. And I'd be a little surprised if we actually closed beneath $3, but we could do. We could follow the orange path, or we could follow the red path. You can see where these all lead to. The red path would be the best place to buy natural gas. That's all the way down at $2.55, and that's on the futures. It's the confluence of this rising trend line and this falling top sort of channel line that we've got drawn above us. So you can see that's the best place to be possibly buying natural gas if it is to bounce and we're to go long. There's another opportunity here at the 200-period moving average and this shorter term trend line. And of course, where we are around about now between $3, let's see exactly where the price is, $3.16, and then the top of this area here at about $3 or $3.05. So we do have a small long position, not on the futures, on the continuous. I'll be looking to get into this after tomorrow. I'm hoping that we could get a dip down into these much deeper levels in order to get a better probability buying position. We're also short on WTI. I actually added to my short position on this move down below the current support level, but we just bounced straight back up. We actually gapped up a little bit again today, so we're slightly above there, but we took off 2/3 of our positions and I've added 20% back on. So we're about half loaded so far, and I'll still be looking to sell into rallies. Once again, I put this up on X and I called this line below us, yellow-orange line, I called it Moab, not the mother of all bombs, but the mother of all breaks. If we do break below that level, roughly at around 66, 65, somewhere around there, and close beneath that level, we should see WTI moving down to the bottom of this channel. Let me just quickly zoom into that so you can see it better. Down to the bottom of this channel, that could take us down into the high 50s and then potentially even much, much lower. So we're short on WTI, and we have a very small long position on natural gas. US 10-year just falling off down to that trend line, bouncing up and gapping up a little bit today. And as a result, TLT's fallen off a little bit today as well. But if we can break down and close beneath this trend line and the 50-day moving average, we should see a move down to the next level at about 4.25 and then just above 4 at about 4.1, 4.12. TLT, as you can see, has just fallen off a little bit today because of that. And then going across the softs and grains, not much to say about this, except that I'll be looking to unhedge cocoa. We're long on sugar, short on cocoa, short on coffee. We took another tranche on coffee yesterday, just selling at that top there, making a doji reversal candle of sorts, not very convincing, and moving down from that level. So we have a nice short position from there and one from there as well. Hopefully that'll keep moving down. And for the rest, we're long. We're long on corn, long on soya, long on wheat. No, we're not long on orange juice. All the luxuries we're short on. That's cocoa, coffee, and orange juice. That one's looking okay. Once again, trying to get through that line. We're also long on cotton. And again, all of these are explained in some more detail in my last videos. Hope you have a fantastic trading day. And if there's anything else you'd like to talk about, please put it in the comments and I'll pay attention to those. Anything you want to ask about. And I'd love your subscription and I'd love you to help me to get to 10,000 subscribers. We're almost there. Take care.
Wake up in the morning, check the charts. Got my coffee ready, time to play my part. Oh yeah. Buy low, sell high, that's the art. Swinging on that market like a real smart heart.